All right, guys, today's video is on increasing your income. So as an agent right now, the market is changing and people are losing opportunities because of their inability to change, because of their inability to have more options. And so today we're gonna talk about creative financing and ways agents can take advantage to double your income. Let's jump in. All right, so I'm here today with Lyle Wells. He's one of my business partners serving the central Austin, Texas area. Thank you, Lyle, for joining us.
Absolutely.
Yeah, so I'm pretty excited to have this conversation because everybody wants to make more money.
Yeah, of course, of course.
And so that's gonna be the focus today is how to figure out how to help more people. Okay, so let's package it into that is how to help more people, because when we help enough people, then we make all the money that we want and need for our family and our hopes and our dreams. And so what's happening right now in this market is the market has been depreciating in value for the last, since May, right? So how much value have we lost?
We're in the last 17%, give or take, right in that area.
Yeah. So 17% value since May 2022. We're in mid-December now, and as we tie up, it looks like we're going to lose more value. Feds are. Did they meet already?
They'll meet next week. Yeah. And they came down from 75 basis points, but hopefully, fingers crossed, it's gonna be half a point. So
yeah. So while interest rates have increased, and then we've caught a little bit of a nice little lull in rates coming down the last few weeks, and that's been good because the rates aren't specifically and exactly tied loan interest rates to the Fed's borrowing rates, and so while those are not a direct correlation, the Fed's raising rates does tend to increase rates. That's what we've seen overall in the last several months. That's what we're probably going to see in December. And so January, February, March, December, January, February are the slowest months in the industry. Mm-hmm. And so things are going to slow down. Agents are going to see less business. They're going to see less opportunities. And so so the conversation today is how can we offset that? What can we do to create more opportunities so that we can serve more people? Okay, so today's conversation is around one tool to use in the tool belt, which is seller financing. Yeah. Right, we're gonna talk about seller financing. Okay, so what is seller financing?
Yeah, so it's very versatile. It's something I love having in our toolbox to either help buyers getting into a home with rates as high as they are. Affordability is always the number one topic right now.
Affordability.
Especially in the shifting market is, do I buy? You can use seller financing in a really advantageous way to create wealth while still having a little bit of a higher interest rate, but you can get into a home. Yeah. And then you can actually structure, you don't always have to amortize that payment. So it may not be as high as it could be. From a seller's perspective, it could be a couple things. It could be used to get out of a sticky situation. We've had a lot of flippers.
So I think let's start there. Yeah. Why would a seller want to do seller financing?
Yeah, so two reasons. One is in this market, it's shifting, right? Buyer sentiment's down with the compounding rates. People are slowly buying, so they may have to get out. So there's a way to structure a way for a buyer to kind of come in, take over. You can do a combination of several different techniques. You can even do a sub 2 into a type of a seller financing. That way the seller can get their money today, and then they can spread out their losses over time. So we've done that with a couple of people that we've been talking to.
Okay, so one way would be that one reason they'd want to do it is to spread the loss. What does that mean?
Yeah, so you can take all of the losses today, but
losses from what?
Losses from, so let's say if I'm a flipper and I bought the house, and I put a bunch of money in it, expecting to get a higher return. Well, now the market's shifted. Yeah. The money I put in it is really worth nothing, and because of all the comparables, and so I'm upside down essentially on that.
Yeah. By the way, we have several clients in that boat right now where they got caught in the shift. Yep. They're several $100,000 into the properties. And so there's loss.
Yep.
All right, so we won't stay here for the whole video, right? But we're talking about on which type of sellers and which scenarios would consider seller financing. Yep. So an investor who's got some loss to spread out. Go ahead.
Yeah, an investor who has some loss to spread out. That's a good advantageous way. So it gives them a way to get some capital out, and they can go and put it into another property to offset their losses.
How do they get? What capital are they getting out?
So typically we have various different types of buyers who'd be willing to help a flipper out to get it long term. So they'll typically pay 10 to 20% down for the property. They're actually going to pay you a little bit more than the value of the house, so maybe May prices. But then they're going to want a spread for themselves to take the risk on that note. So you won't get a spread, and they'll basically just pay your note for 8 to 10 years, depending on what that term is, for like that balloon.
Okay, and the down payment's a way for them to create liquidity up front, where the buyer's going to put 15-20% down, right? Because what types of buyers are looking at seller financing?
Yeah, so you got several different types. You have what we mentioned. There's investor, actually buyers for seller financing. You have note buyers. You have subject to buyers that you can tie.
5 seconds on subject to.
Oh, okay.
What is it?
Oh, 5 seconds subject to is basically you're taking the existing mortgage, someone who has like a 3% interest rate, and also maybe a mature loan, so they've been in it for 10 years out of 30 years. So now you're picking up a loan with a low interest rate, a lot of interest already paid off, so you have a lot more principal being applied. So there's a lot of ways to really look at the numbers there, and you can actually pay a seller a little bit more as well. So it really is a win-win.
Right. So there's let's go back to sellers and then we'll come back to buyers, which is what types of sellers would be looking for would be considering seller financing. So investors who want to mitigate some loss, get a nice large chunk of a down payment up from a buyer on 15 or 20% down.
Yep.
A regular homeowner.
Yeah.
I mean, would they consider it?
Yeah, absolutely. If you don't have a note,
Mr. and Mrs. Smith, like.
Yeah. So if Mr. and Mrs. Smith own their house outright, those are probably the best I like to use for seller financing.
So free and clear, no balance on the mortgage.
Yeah. So typically,
can somebody who has a mortgage still do seller financing?
Yes, they can. We can.
We don't just first. We'll go back, right?
Gotcha.
Okay.
So a seller who's free and clear is actually in the best spot to be there because they have no mortgage, so they're just paying their taxes and their insurance. So they can actually adjust their rate a little bit more competitively, so they can make a 5% or 6% return. There are buyers out there willing to pay 8 to 10. So if you compound,
but even if they got 5%, or I mean, would it be wise for them to take below market rate for interest rate?
You absolutely could, and the reason you would do it as a seller is you have no note, so you're making all.
It's all yours.
It's all interest.
Yeah.
All of that payment is interest. We all know we're in the business. It's 90% of the first couple years are interest.
Yeah. And they could still take a large down payment,
Absolutely.
10, 15, 20%.
And reinvest that into another property.
And they have cash flow for, almost like it's a lease to own scenario, really.
Absolutely.
Right?
Absolutely.
Okay, so sellers who would consider it, buyers who would consider it. So we talked about buyers before. What type of buyers do we do?
So we have note buyers. We have.
What does that mean, note buyers?
A note buyer. So financial institutions. Some are regulated and about like Dodd-Frank, and then there's other ones out there that are just looking to pick up a note. So they'll look at all the terms.
So these are investors, though.
Right, they're investors.
These are investors, right? But what type of average everyday buyers are attracted to seller financing?
Yeah, the number one people are going to be people who used to own, but had some sort of major loss, whether it's a divorce, a death, something that created financial catastrophe in their life to where it caused them to no longer sell, so it affected their credit. But those people actually want to be homeowners again. I think there's a stat out there, it's somewhere in the 80-90% of people who used to own, who are currently renting, wish they were owning again. So they're willing to pay a higher premium because they can't get traditional financing because their credit's been damaged for whatever the reason is. They were always paying. Typically, you want to stay away from like foreclosures or people who had financial loss, but this is more people that had like circumstance loss, and they had to mainly through divorce or probate. And then those people will actually pay a higher amount. They have high income earning, so it's not that they can't buy because they don't have enough money. Entrepreneurs like ourselves, where we do tons of write-offs.
A lot of entrepreneurs who, for whatever reason, their debt to income is skewed, and so the credit actually may be even okay, but their debt to income for whatever reason is skewed, and so we see a lot of high-profile people doing seller financing and wanting to use that as a temporary time frame to be able to get to traditional financing, because seller financing really is going to be typically a 5 to 7, maybe a 10-year hold as far as the seller carrying the note. Typically, we're looking for 10 to a minimum 10%, but we like to negotiate 15 to 20% down payment from the buyers. And then interest rates can vary as far as how much a seller would charge for interest rate. Now, look, all of this is negotiable. And so figuring out what type of terms you'd negotiate would be completely relative to the circumstances of the seller, the needs or capacity of the buyer, and then you're able to negotiate that. And so I think right now, with circumstances changing, interest rates raising, many more people being in scenarios where they are not able to traditional finance, seller financing is a huge opportunity for sellers and buyers to utilize. Now, this is not going to be a majority of the market.
Right.
It's a niche, right?
Mm-hmm.
And understanding how to navigate that niche is important, because you want to legally stay within the confines of moral, ethical, and legal statutes, so that you don't get sued.
Always a good thing. Yeah.
Always a good thing to not get sued. And so I think that there's a lot of opportunity right now for people that are.
And another good thing too is there's actually a way out there. People who this is very attractive to are people who have ITIN numbers and they don't have your traditional socials. There's actually great products out there. They're typically going to need a longer hold period.
Yeah.
They're going to want that 10-year period at minimum.
Yeah.
Because they've got a lot of hurdles to be able to get traditional financing down the road. So you definitely want to be like morally and ethically. You want to make sure you're setting this up the right way. If I'm the seller, I want to set the buyer up for success, and vice versa. The buyer's going to always want to try to help out the seller. Towards it really is a win-win, which is why I love traditional finance.
So EITNs are people, non-citizens, right? People who are not from this country. We see a lot of that in the Southwest region, and all over the country, actually. It's America. There are people coming here all the time. But those are great opportunities, because there's a lot of those people who have the
make
cash.
A ton of money.
They have the cash to put down, but they don't qualify traditionally. We see a lot of people in that bucket. Okay, look, this is an opportunity, absolutely. Now, navigating this, that's where you want to be careful. So I'd say, just as we have been in relationship with the right people to understand how we can better serve people in this niche, I think understanding who are you in relationship now as the agent, making sure that you're developing relationships with the right people. So hey, if you're an agent, reach out to us and let us know what situations you might have. We may be able to provide consultation. Certainly, we could. One of the primary things that we're doing is developing relationships with agents to be able to make it a win-win situation for everybody. Because if you've never done one of these before, you're going to want to be in a relationship with somebody so that you don't get sued. And that's going to bring a lot more confidence to the buyers or sellers that you're working with, so that they feel comfortable, because they're going to smell when you don't know the answers to things, or you don't know the direction, or you can't answer serious questions. They want to work with somebody who knows what they're doing. Hey, by the way, have you ever done seller financing? Love to hear about it in the comments below. What are your thoughts on seller financing, good or bad? Because there's a lot of stigmas around seller financing, and justifiably so, because there's people who are taking advantage of people in seller financing. And so, and there's sellers and buyers who just don't know, and so they won't do it.
Right.
There's a lot of agents who run into situations that they know that there's something there, but they don't know how to move forward with it. And so just because they don't know, they lose out on the opportunity, which I think was the biggest reason why I really wanted to make this video, is to talk generally about seller financing and know, look, this is a huge opportunity right now as the market shifted for agents. This is a huge opportunity for sellers whose homes have expired or withdrawn, and they weren't getting what they wanted for the property, but they can get that price on a seller financing deal. Lot of people out there like that, right? Or for sale by owner, who wants $750,000 for the property and not happening, but seller financing could be an option for that. Okay, so anything that I didn't talk about that we should have talked about on seller financing?
No, I think obviously Dodd-Frank's a big thing for seller financing. We have a lot of networks that we use, attorneys, things like that. We'll always consult on
to make sure that they're
to make sure that we're within the guidelines. Because the last thing we want to do is just say, hey, that's a great idea, and from the surface it is, but there might be some legal language or context that needs to be accounted for, and so that's why we always are consulting. So we have a local in-town attorney that we always consult with on all these.
Yeah, that's a big deal. I mean, yes, it's a good idea, and yes, it needs to be done correctly, and yes, you need to be in relationship with people who've done it and know how to do it, and that's why we reached out. So love to hear a little bit more about your experiences with seller financing, what you think about it, questions on it. Reach out to us, because we're always having conversations literally on a daily basis with people around creative solutions, simple solutions and creative solutions to help people the financial advantages as the real estate experts here in Central Texas. I know I'm wearing a Yankee cap, but I know. I'm sorry. Hey, love you guys. Your vision, our mission, Vision Realty Group. See you soon.